For those of you who own XRP or any other coin, I think you should pay close attention to what Warren Buffett is doing right now. Although Warren Buffett has been very vocal about his dislike of cryptocurrency, that doesn't mean that it doesn't play a part in his business strategies. And Warren Buffett is doing something right now. He is selling more stocks than ever before and holding more cash than ever before. He has been very accurate in predicting every single one of the past huge crashes in the stock market and the real estate market, which has made him a lot of money. This doesn't mean that there will be a crash tomorrow, but it does tell us some very important things about what this bull run is likely to do. That being said, I'm going to show you this video. Buffett is leaving Berkshire Hathaway with more cash than it has ever had. $300 billion in cash. $300 billion in cash. That's about the same as the whole GDP of Colombia. To give you an idea, it's also enough to give $1,300 to each of the 260 million people who live in the US right now. Buffett is leaving his job as CEO of Berkshire Hathaway, but the events leading up to that have been some of the strangest in his career. It's not often that Buffett has chosen to save this much money over the course of his life, He has so much cash that it now makes up an amazing 30% of Berkshire Hathaway's entire assets. The record high number is now reached. And, the only time Berkshire Hathaway had broken all-time high records was during the 2008 financial meltdown. And one last thing I want to say about this map that Bravos shared. You can see that he started getting a lot of money before this point, even in 2003 and 2004, and he had record amounts of cash on hand right when the crisis was at its worst. As things began to fall apart, his cash and reserves dropped like a rock until they were almost at an all-time low. This shows how much cash and capital Warren Buffett has available and how good he is at buying and selling at good times. Since this is a monthly chart, he's not always getting the top and bottom exactly right, but he's getting there. And because of that, his results have been pretty strange when compared to the S&P. And I'm going to show you this because his acts are clear proof. There were also big jumps at the end of 2021, just before the bear market of 2022, and in 2000, just before the dot-com bubble burst. It seems like Buffett has been able to predict and avoid some of the worst and most painful times in recent financial history. This is exactly why many people have called him the Oracle of Omaha. That's very clear when you look at this chart, which shows how well Berkshire Hathaway's stock does over time compared to the S&P 500. When you look at the recession bars for the dot-com boom and the 2008 financial crisis, you can see that Berkshire Hathaway did really well during these times of economic trouble. Many of his good results during these times can be simply attributed to the fact that he had more cash on hand than normal. Does history happen again today? Could Buffett's record-breaking amount of cash accumulation today be a sign of another big crisis that will pay off for him and cause Berkshire to do much better than the S&P 500? All of this makes it look like Buffett knows something about the economy's future. But he has said many times that this is not how he works. He's even said that being an economist isn't really useful, at least when it comes to making money in the market. He doesn't try to guess what will happen. Instead, he buys great businesses at fair prices and invests in them. Another very important lesson that I think we should learn before moving on to Bitcoin. This is where the idea came from for me to only invest in crypto companies that are doing good things for society and making people's lives easier, better, and cheaper around the world. Buffett has done very well because he looks at companies and their earnings, as well as their effects on the world and the number of people who use their products. He also checks to see if the business makes sense. After looking at the data, like the key quarterly earnings and comparing them to the price per share, and all those other ratios, he decides if it's a good or bad deal for the company itself, and then he buys something because of that. Generally, investors are very scared during times of big corrections and make hasty choices that are, to put it simply, wrong. That's why Warren says those times are good to buy. And when there's a lot of mass gambling and people are putting crazy amounts of money into companies at prices that don't make sense, Warren sells because he's telling people, listen, this doesn't make any sense. I believe this is a bad supply deal. I'm not going to buy right now, but you guys are welcome to take my stock. This is why he has high amounts of money. Since Warren owns so much of Berkshire Hathaway, he can't just sell everything at once. So he'll slowly sell when there is a lot of speculation and slowly buy when there is a lot of undervaluation. I also think the crypto market is a lot like that. No doubt about it, we are definitely in a bull run right now. XRP is really killing it, I mean it. But I don't think we're even close to the top of this run for altcoins. I think Bitcoin is getting pretty close, but I don't think altcoins are close to their top. I do believe it's important to use the right methods that have worked in every other case in history, such as those used by Berkshire Hathaway. If no one takes any gains at all during the rise, they miss the top and then see it go all the way back down to where it was before the bull cycle. This has happened many times before in cryptocurrency. You'll probably kick yourself in the behind. And if you're buying at the peak, when is it? There was a lot of talk, and people were going crazy. Then you also have a lot to lose here. Yeah, of course, I know that many of you will want to say, well, this time it's different. But I heard that in 2017, I heard that in 2021, and I hear it again in 2025. It's always the same thing. This time is different. All of us are adopting this time. We're not going to lower our prices ever again. So, we're not going to lower our prices ever again. It's not going to happen. The same thing happened to me. Every single time, guys. This time is different in a lot of ways, and I don't think we're even close to the peak. But I'm just saying that Warren Buffett knows what he's doing, and there's a reason why he has done so much better than the S&P 500. But there are some other important things to note here. Listen up, and the truth is that he would rather put more money into cash if he can't find good businesses at fair prices. We're seeing a lot of this today. By almost every measure of history, the stock market as a whole is very expensive. In fact, the Buffett indicator, which is one of Buffett's best ways to figure out how much a stock is worth, shows that the stock market is at one of its most expensive points ever. This number compares the total market worth of all U.S. stocks to the country's GDP. It shows whether the stock market is too expensive or too cheap compared to the size of the economy. That number is now, which means the stock market is worth twice as much as the whole U.S. economy. It has never been this high before. In any given point in time, this chart shows how far the Buffett indicator is from its past trend. As of right now, it's about 2 standard deviations above its previous trend. The last time the Buffett indicator went off to such a wide range was at the height of the dot-com bubble in 2000, just before the crash of 1970. The stock market has been very expensive for a few years now, which is why Buffett hasn't been able to find good places to put his money. To be clear, these prices are not a way to figure out when something will happen. From a theoretical point of view, prices can stay high for a long time or low for a long time. But if you look at prices over a long enough period of time, you'll usually see that they return to the mean, the Forteffe mean. You should use them the way Buffett does, which means buying stocks when companies are selling at good prices and have a lot of room to grow and increase in value, and keeping your cash on hand when companies are selling at bad prices and have a lot of room to go down. Like putting money into stocks in the early 1980s or at the end of the financial crisis in 2009, when they were the cheapest ever, gave some of the best returns for investors over a 10-year period, as prices rose a lot. On the other hand, if you saved money when prices were high, like in the late 1960s or 1999, you escaped some painful drops. In the last 25 years, Berkshire Hathaway has been able to make a gain of 1,400%, a gain of about 15% per year, compounded. With a return of 300% in the same amount of time, this is almost 5 times bigger than the S&P 500. Back then, putting $100 into Berkshire Hathaway would now earn you $15,600. We also believe that Berkshire Hathaway is still a great long-term business plan.